In this class, I want us to look at cost classification. This is very important in cost analysis in the production process. Let me ask you a question. If production doubles or triples, do all costs double or triple? I heard you. You said no. You're correct. All costs do not double or triple as the production triples or doubles. No. So this brings us to what we call fixed costs and variable costs. Firstly, I want us to categorize costs. And you can categorize costs based on various parameters. So let's begin by looking at classification of costs according to behavior. We're looking at how costs react. So we have fixed costs. Fixed costs are those costs that remain unchanged as the level of activity changes. So as the production is increasing, you are doubling the production, you are doubling the output. Those fixed costs do not change, at least within the relevant range. In the short run, fixed costs remain unchanged even as the level of activity is changing. Variable costs, on the other hand, are those costs that change in proportion with the production output. So if you're going to increase your production output, that's the level of your activity, then it means the variable cost will also change in that proportion. So they move in sympathy with the level of activity. Classification of costs by behavior. Costs could be fixed, they could be variable, and they could be mixed. Variable costs are those costs that change proportionately with the level of activity. They change as the level of activity is changing. Fixed costs are those costs that remain unchanged as the level of activity is changing within the relevant range. Mixed costs are those costs that contain variable and fixed elements. So you need to do a separation. You need to separate them using maybe high and low method and using regression analysis. You need to separate them. So they are mixed. You call them mixed costs or you call them semi-variable costs. Another way we classify costs is based on function. What do they do? So we have production cost, we have direct materials, we have direct labor, we have manufacturing overhead, and then we also have non-production costs. This is another way. Another non-production cost, we have selling and administrative expenses or costs. So the costs could be production costs or they could be non-production costs. That is classifying costs according to function by what they do. Another one is we classify costs based on traceability. Can you trace the costs? So you have direct and indirect costs. The direct costs, you can easily trace them. You can trace them directly to the production process. Like if you look at what we call prime costs, direct materials and direct labor. If you look at them, you can trace them directly to the production of that product or the rendering of that service. So those are direct costs. Then we have indirect costs, which are like overhead. So they are not easily traced to the product, but we know that they are also incurred in the production process, but you cannot easily trace them to the production of the product. So we also have classification based on relevance. Relevance. We have relevant costs. We have relevant and we have irrelevant costs. We say relevant costs are those costs that differ between options. Okay? And it's a future cost. So if you've not watched my video on relevant costs, please go and watch it. So they differ between options. And then irrelevant costs are those costs that are not useful for decision making. The relevant costs are useful for decision making and irrelevant costs are not needed. For example, sunk costs is not relevant in decision making, but you have other costs that are relevant, like opportunity cost is relevant. It's the benefit that is sacrificed. We classify costs based on controllability. There are costs that a manager can control and there are others that you cannot control. So we have controllable costs and we have uncontrollable costs. And then we also categorize costs based on time. You have the costs that are past, they are historical costs. And then we have costs that are future costs. They are estimated future costs. You estimate those ones. Okay? All these are various ways that we categorize costs. Then we also have special decision costs like incremental and differential costs. When you are looking at courses of action, different courses of action, you can see that one is increasing, it's incremental, and they are different between various courses of action. Then there are costs that you also avoid. We have avoidable costs and we have unavoidable costs. And then you have shut down costs. All these are various types of costs. So these ones are like special categorization. So to summarize, I want to say that we have different ways of categorizing costs. We categorize costs based on various parameters. Some are categorized based on behavior. Other costs are categorized. Sometimes we categorize costs based on function. We categorize costs based on traceability. We categorize costs based on relevance. And then we also categorize costs based on controllability. And also we categorize based on time. And then, as I said, we also categorize costs based on accounting treatment. You know, we categorize based on accounting treatment, like product costs, where you have direct material, direct labor, and manufacturing overheads. All of them go to inventory. And then we have period costs that are expensed immediately. Then we also have the special decision costs. So, if you enjoy this one, I want you to like, share, and don't forget to subscribe to the Finance Simplifier for more like this.